The distinction between representations and warranties for the national portion of the life insurance exam is a critical topic that defines the legal weight of information provided during the application process. A representation is a statement made by an applicant that they believe to be true to the best of their knowledge and belief at the time of the application. On the exam, you must identify that representations are not absolute guarantees of truth, but are instead the information that the insurer uses to decide whether to issue a policy. If a representation is found to be false, it is classified as a misrepresentation. But this alone does not give the insurer the right to void the contract. To void a policy or deny a claim, the insurer must prove that the misrepresentation was material to the risk. Materiality is the gold standard for testing this concept. A material misrepresentation is one that would have caused the insurer to reject the application or charge a higher premium if the truth had been known. For example, if an applicant fails to disclose a history of heart disease, that is a material misrepresentation because it directly affects the underwriting decision. Conversely, an immaterial misrepresentation, such as an applicant forgetting the exact date of a minor checkup several years ago, typically would not provide grounds for voiding the contract. You must contrast this with warranties, which are absolute guarantees that become a part of the insurance contract itself. A warranty is an ironclad promise that a specific condition exists or will be met. If a warranty is breached, the contract is voidable by the insurer, regardless of whether the breach was material to the risk. This means even a minor or unintentional falsehood in a warranty can result in a loss of coverage. However, for the national exam, you must remember that in nearly all states, statements made in a life insurance application are legally considered representations and not warranties. This legal protection prevents insurance companies from canceling policies over small, unintentional errors. One of the most frequent traps on the exam involves questions that ask if an applicant's statements are guaranteed to be true. The correct answer is no, because they are representations and not warranties. Another common trick is a scenario where an insurer tries to void a policy for a false statement that did not actually affect the risk. In this case, the insurer would likely lose because the representation was not material. To keep these straight, think of the phrase that representations are reflections, whereas warranties are walled-in guarantees. A reflection shows what you see and believe, while a walled-in guarantee is a permanent part of the contract structure. You should also be aware of how the entire contract clause interacts with these terms. Since the application is attached to and becomes part of the entire contract, the representations made by the applicant serve as the legal basis for the policy. The insurer generally has a 2-year contestable period to discover and challenge any material misrepresentations. After this 2-year window has passed, the policy becomes incontestable, and the insurer can no longer use misrepresentations to void the coverage. When a material misrepresentation is discovered within the contestable period, the contract is often described as voidable. This means the insurer has the legal right to rescind or cancel the policy. If the insurer chooses to void the contract, they must typically return all premiums paid by the applicant. This differs from a contract being automatically void, which implies the contract never existed in the first place. You might see a question asking about the difference between a misrepresentation and concealment. While a misrepresentation is providing false information, concealment is the intentional withholding of material facts. Both involve the concept of materiality, and both are treated as representations on the application. The test will often try to trick you by suggesting that any false statement allows the company to keep the premiums and deny the claim. That is incorrect. The company must prove materiality, and they must usually return the premiums if they rescind the policy during the first 2 years. Another point of confusion is the difference between an opinion and a representation. If an applicant says they believe they are in good health, that is often treated as an opinion, whereas if they state they have not seen a doctor in 5 years when they actually saw one last week, that is a statement of fact and therefore a representation. Always remember that for the national exam, the focus is on the consumer protection aspect. which is why the law treats application statements as representations. This prevents the insurance company from using a minor technicality to avoid paying a death benefit to a beneficiary. By keeping the focus on materiality and the 2-year contestability limit, you will be able to answer any question related to representations and warranties with confidence.